Okay, welcome guys. When we say I want to quickly just do some quick overview of what we are doing. As I told you, you guys need to um, create your account on TradingView and also download your mobile application to set up your TradingView account. Actually, you can also do it on desktop. It's just tradingview.com, and you click on the chat icon. It will open the chatting software for you. But for the mobile version, you just download the app and you log in the same account. Everything you do on the desktop will reflect on the mobile, and every changes you make on the mobile will show on the desktop because it's a cloud-based software. So I told you we're going to be doing all our analysis on TradingView. Now, quickly, the three trades that we have on watch list is USD CHF, USD CHF, this last three that you're seeing here, USD CHF, NZD USD, USD ruble. USD CHF is USD, US dollar, Swiss franc. NZD USD is New Zealand dollar, USD dollar, US dollar. USD ruble is US dollar and Russian ruble. So let's open um, USD CHF. Now, I told you we are swing traders. We take trades for the long term or for the mid term, not really long term but the mid term. So it means that we can be in a trade for a couple of days and even up to um less than maybe a week or 2 weeks. So it therefore means that we get our directions on the higher time frames. With this we find out where the market is going on the long term for a couple of days or a couple of weeks on the higher time frame. So for us to get our direction, if you see the software now, every tool is here. So it may not be that flexible on the mobile, but I think it's manageable. You can zoom in, you can zoom out just by holding the screen, um, going in and out. So these are the tools. Here you have all the likes of the trend line, the info line, trend angle, and the likes. If you need the trend line, just click on this vertical line, horizontal ray, horizontal line, and the likes. Here you have your your other tools like Fibonacci. We're going to be using a lot of Fibonacci retracement. Here you have your brush, your rectangle, and the likes. Here you have the long and short um, tool. That's this particular um, stuff you are seeing here that shows your stop loss, your entries, and your take profits. Is a long and short position too. So we're going to quickly move. This is the time you can change time here. So we're going to quickly move to our weekly time frame. Okay, let's go to the monthly first and see what's happening in the monthly. On the monthly, there was an aggressive rejection of this region, and that's why I have this rectangle here. This rectangle you are seeing here, it was an aggressive rejection. The market made a pull down, broke this structure down. It went to make a retest of that support, not resistance, and it held 1, 2, 3, 4 consecutive times. I mean, in the last 4 months, that support stone resistance has remained solid. It has held. That's why you are seeing these wicks. So it means that the buyers actually pushed the market to that price level, but the sellers actually took over and pushed the market back down. So the market came back down. So it broke down. There was also a support, a resistance here. You are seeing here this green candle. The market broke it down, and from this alone, we see that the market is still kind of bearish. But let's go to the weekly time frame to see whether there's any uh, any direction for us. Okay, it's still bearish, it's looking bearish. So let's go to the daily. On the daily, we have a clear direction, we have a clear strategy. Now on the monthly, we only saw that there was a great rejection at that level, at that support level that was torn resistance for the last 2 3 4 months. So it means that that level of resistance, of support, store resistance, has held. So market is still below that structure, below that level. So that's why I call structure. When I say structure, I mean resistance and support. That is resistance and support. That's what I mean by structure. You can search that out and do some research on that. Along the line, we'll also be treating them. Now on this daily time frame, you can see a clear impulse to the downside. Now these 3 candles, 1 2 3, and this last candle. Okay, let me get my okay. This is this red candle followed by this one and this one give us a clear impulse to the downside. When we say impulse, it means a power move, a move that was aggressive. That is, in this case, the sellers took the market down aggressively, and they printed 3 to 4 daily candles, taking the price down. That's an impulse. Now, when the market make an impulse, we all know that market do not go on a straight line. After an impulse, you expect a correction, you expect a pullback. You expect the market to breathe. It's like you're running a relay. After taking a dash and you have exhausted some of your energy, you are expected to take a break and breathe and just like relax a little before you continue for the next dash. That's basically the concept behind the TC strategy, the trend continuation strategy. It means that the trend is going to continue, although there's a pullback, although there's a realization, although there's a correction. So this zigzag move you are seeing inside here now, this pullback, this green line, this green candle, this red, this green, and all that, this zigzag move is a correction. It's what we call correction or a pullback. So we are seeing an impulse, you are seeing a correction. An impulse, and you're seeing a correction. So, but we expect the market to make a push back down for a continuation to the downside. So that's why we call it a trend continuation strategy. So on the daily, we have a clear strategy, and that's also in correlation with what we have seen in the monthly, that the market wants to go down because that's resistance has held for the past 4 months. So we have a clear strategy we are applying. It is called a trend continuation strategy, and in this case it's a downward trend continuation, a bearish trend continuation, meaning the sellers are still very much in charge. But right now we know that the market is going down, but we cannot just take any position. We can't just enter the trade just like that. We have to wait for a clear setup for us to enter this trade. And what do? According to our rules, we go to the 4 hours chart. Go to the 4 hours chart to take our entry. So on the 4 hours chart, clearly right now the market is above structure. It has formed a support. For you to know a support, is just follow the movement of the market. These red candles, you are seeing this 2 red candle, it came down, it could not break down because there was a support here. You will check your left side, there's this green candle going up, this green candle that went up, then this red candle tried to break it to come back down, it could not, something held it, then it continued upward, it continued upward, then it came here, it was pushed back down by the sellers, then it got here, it could not go back down, it went up again, then this candle broke it down, then it tried to go up, it tried going up and it pushed back down, it's trying to go up again. But for us to have a clear entry, we want this structure and this support zone now to be broken, and that's why we have identified this zone as a support, as a level of structure. And for us to be in this market, the market must clearly break this zone downward before we can be taking our position. And in addition, after a clear break downward, we also have some other indicators that we use to know that the market has actually changed environment from a bullish market to a bearish market. What is that? It's our EMA, this red and this blue line. And according to our rules, the red line must cut the blue line downward. This red line must cut the blue line downward. Then for our MACD, this chart you are seeing below, this blue line must be below the zero. Right now it's already below the zero, meaning the MACD is bearish right now. But right now I don't think the EMA is ready. It's cut for, let's zoom in. It's almost cutting for short. It's almost cutting for short. The red is almost cutting the blue line, but more than that, we must see a clear break of this support level. By the time the market breaks this support, it becomes a resistance. If you observe, this is a support. This zone is a support zone. That's why the market could not come down once. It printed a green candle in between because there was something holding it there. There was a supply zone. It's a supply zone. Buyers were waiting here to push the market back up. So when the market came down, sellers could not easily push it down. It went up and struggled a little in this region before it finally broke down. And here the market is being held again by support. Then the market went back up and broke this place. Now becomes resistance here, but it broke it up, and that's why when it was trying to come back, it was held by that support, not resistance, not turn support. So when this market breaks down this level, I haven't break down this support will turn to resistance over here, and that's why at the retest of this zone we will be in this market. And that's why when everything is set, when the MACD is cut for short and the EMA is cut for short, we can place, and the market has broken down even before it go for the retest, we can place our sell limit order and say, okay, when the market comes back to this zone, we want to be in this market, and that's how we enter the trade. That's pretty much the TC strategy, and that's what we are applying in USD CHF that we are taking. Now for the stop loss, we take it above the eye. The stop loss is usually above the eye or above the 0.782 retracement of the impulse. I will be explaining that as time goes on. Don't just beat yourself about it. Just take it one day at a time. Easy, easy, easy. Don't memorize anything. Don't cram anything. It is not, you're not going for an exam. Just take it easy. Over time, you will learn these concepts, you will learn these things, and it will stick with you. Now for the take profit, go back to the daily chart. The take profit for daily for the TC strategy is the Fibonacci taking on the retracement. Is the minus 0.27 Fibonacci taking on the retracement. That's this Fibonacci. This is the retracement. Yeah, you take it down to the retracement. The minus 0.272 is the target for take profit. This is how we got our take profit. So we expect the market to make a lower low. That's the idea behind TC strategy. Is the market has made a lower low, it has retraced, made a lower high. We want it to make a lower low. That's just the idea behind the TC strategy. And as time goes on, we'll be treating other strategies and how they work. We're going to be applying this rule strictly without emotion, without any feeling, without any involvement. So we're going to be just applying it just like a robot will do. And I enjoy you to stick with me as we master this very, very amazing skill that can change our lives forever. Thank you and God bless you.